All right, so in this section, we're going to talk about some of the benefits of trading the futures market and why you may want to trade futures over other financial markets. Okay, so this section is going to be brief. I'm just going to briefly go over these things. If you want to know more, feel free to do some research on your own. Okay, all right, so here's some benefits of trading the futures market. One is it has tax advantages over equities. Now, disclaimer, I am not a tax professional. This is not tax advice, so just keep that in mind. But there are tax advantages over trading equities, over day trading equities. And basically, futures are traded as the same way that swing trading is traded. Now, it's a little bit different once you go to file your taxes and all that stuff, but you're not paying as much in capital gains with futures, with day trading futures, as you would if you were trying to day trade stocks. Okay. So another benefit of trading the futures market is it allows you to leverage small accounts. So if you only have a small amount of money to trade with, this gives you a way to actively trade in the market, especially day trade, not being limited by the PDT rule for stocks. And you don't have to, it doesn't take a lot of capital to, to be able to trade as freely, versus like options, to where you can trade options with a small account, but you can only trade certain things because of the premium. Compared to options also, futures are so much more simple to understand. All you need to worry about with futures is if the price is going to go up or down. It's not that simple with options. So going back to the small account, so if you only have a small amount of money to trade with, you can definitely get your money's worth with the futures market. And also you don't have to worry about trading on margin as you would with equities, especially now since there are a lot of brokers that lowers the margin requirement compared to what the CME group sets the margin requirements at. You can go a long way with a small amount. So the smallest amount that I would say that you could actually trade futures with is $1,000 at the least. Now technically, because of the day trading margin requirements, you can trade with lower than that, but especially when you're starting out, it's going to be difficult, right? So I would say try to start out with $5,000 or $7,500 if you can, $10,000 if you can. That'll give you plenty of leverage. Now there is one caveat to that. There is one way that you can trade with much less than that. Let's just say if you have $500 or if you got $200, you can trade the futures market with $200. I will go into more detail about that later. There's a little bit more to know about it, but we're going to cover that later. Okay, so that's leveraging small accounts. Another benefit is it allows you to narrow your focus, since there are so many products that trade in good ranges every single day. You have a lot of products to choose from, and all you need to pick are one or two. Like for example, I only trade the NQ, the Nasdaq futures, and I've only been doing that for like the last couple of years, and that's more than enough. It gives me something to trade every single day, and if I miss a day, it's not the end of the world. Staying out of bad trades is also good risk management, because you get to preserve your capital, right? So you have plenty of things to choose from. You don't have the PDT rule, and you can just focus on that one contract, which allows you to focus on what's really going to make you a successful trader, that we're going to cover in a later section in this course. All right, so these are the main benefits of trading the futures market. And for me, this was, once I found out about all of this, that it was a no-brainer for me. This is why I started trading futures, and I stuck with it. All right, so in the next section, what we're going to talk about is how to trade the futures market.